Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Ken Gee with us. Ken is the founder and managing partner of KRI Partners and the KRI Group of companies. He has more than 24 years of real estate, banking, private equity, and principal investing experience. So Ken brings a lot of wisdom to us today, which is why I am super excited to have you on, Ken. Thank you for showing up.
Well, thanks so much for having me.
Yeah, there you go. And small little fun fact, my dad's name is actually Ken. So it's a good name.
Is it really? Oh,
name.
Awesome.
Yep.
Good name. Smart man.
I told you before we jumped on here at the Real Estate Investing Club, we always start with stories. I like to hear, kind of how you got started and how you got down this path. So why don't you take us to the beginning? How'd you get started in real estate in the first place?
Yeah, good question. So as it turns out, my history includes 5 years as a commercial lender. When I was a lender, all I kept hearing or all I kept seeing my customers do was make a lot of money in real estate, right? And they also said, hey, you know what? Before I do this, before I do that, I want to talk to my accountant. I thought, all right, well, that sucks. I want you to confide in me. So I went and I became an accountant and went to work for Deloitte for 7 years, where the Cleveland office at the time of Deloitte had a huge real estate practice. So here I again had our clients making tons of money in real estate. And I wasn't in there yet. So I said, you know what, enough of this. So I spent about a year and a half trying to figure it out, going to apartment associated meetings and things like that. And in 1997, bought my first deal, 28 units, a small part of Cleveland called Shaker Square. And over the next several years, added units throughout Cleveland. About 10 or 15 years ago, we made the switch to Florida because I thought, my gosh, if I could do well in Cleveland, what if I actually was in a growth market? So about 15 years ago, we went to start figuring out the Florida market, and that's where we are now, exclusively in Central and Northern Florida.
Nice. I love it. So you were kind of on the sidelines, like you were, a CPA, you were working with people who were in real estate.
Yes.
And you're just like, hell no, I want to do that. So let's do it.
Yeah. I don't know how much you know about CPAs, but they work really, really hard. And it's kind of disappointing to see your clients just making money hand over fist in real estate, and you're helping them.
Yeah. But I mean, with that said, we love our CPAs. I couldn't live without mine. So
Absolutely.
A lot of love goes out to them too. So 1997, you jumped out of the sidelines. You decided it's time to jump in. I want to be a real estate investor myself. You started with multifamily. What was the reasoning behind that? Did you just, is the most prevalent thing, or why'd you decide to go down multifamily?
Yeah, good question. So, like most people, they start off thinking, okay, do I want to buy a single family house? Do I want to buy a duplex? If you think about the situation I was in then, I was working at Deloitte. So I was I was working a lot, 70, 80 hours a week. Whew. So I couldn't, and I had a new child. So there was just no way in my life.
Which is another 70, 80 hours a week right there.
Oh, it's horrible. Yeah. So, but there was no way I could actually do the work myself. So I said, all right, I have to buy something big enough that I can kind of treat as a business.
Yep.
So 28 units, said, wait a minute, this makes sense. I can have someone on site, give her a free apartment. She can do a lot of the work for me. I can hire maintenance guys. So the 28 units gave me enough income to do that. That's how I ended up with multifamily. And I always liked apartments. I mean, a lot of the clients that I talked to owned apartments. And they did it because, they're apartments. Everybody needs a place to live. And it seemed just logical that would be a good place to invest. So that's kind of how I got there.
Perfect. And I love that you said treat it as a business, because that is a mistake that I made. And I feel like a mistake many others make is They want to get in real estate and they're thinking, I don't have a lot of money, so I'm going to start small. And that's, I'm going to get my foot in the door, maybe buy one unit, maybe another couple months down the road, couple years down the road. And while that does make sense, in practice, it is kind of shooting yourself in the foot, because like you said, when you buy a bigger unit, you can actually hire people to help you. And that is good. So it's really cool that you kind of had that wisdom at the very beginning. You said, I'm not going to buy something small that I have to manage myself. I'm going to buy something big where I can actually hire the help that I need in order to run it. So kudos to you for having that foresight there. So you got into multifamily, started in Cleveland, and then you moved down to Florida. Take me through that process. A lot of people want to invest outside of their own market. I mean, I live in Seattle, and Seattle is just crazy. It's like everything's a free cap here. So I looked outside. I went to Texas to buy self-storage. So what was your kind of thought process there in, out of state investing? And did you move there first, or did you begin to buy when you weren't located in Florida?
Yeah. So interesting. I don't live in Florida. I currently still live in Cleveland. I just spend more than half my time in Florida because that's where we're all throughout central and northern Florida. We take care of almost a couple thousand units. So we're really busy. So there's not, believe it or not, I first thought of Florida because, well, why not go do what you like to do in an area that you'd like to be in, right? I mean, Florida is a great place to be. Just to be there. It's wonderful weather, all the reasons you want to be in Florida. Now, from a financial standpoint, it made sense because I know it's a growing market and I'm coming from Cleveland. So Cleveland is not a growing market. And you can make money in Cleveland, but you have to do it differently. It's hard. When we renovate a property in Florida, we get $300, $400 increase in rents. There's no way on earth I could do that in Cleveland. I was hoping for $50 in Cleveland. So about 10 or 15 years ago, I always tell my kids the story. I decided, all right, I'm going to go down there and I'm going to go figure this out. Well, when you get off the plane, there's no one there to meet you. This is the interesting part, the part that people don't think about when you're trying to go out of your market. So you've got to figure out, okay, where do I want to start? I got to start understanding markets. I have to somehow create some credibility with brokers so that they'll actually take me seriously, because in markets like Florida, they have way more buyers than they need. They don't really need another buyer to spend time with. So that whole process took quite a bit of time because you just had to slowly just go tour properties and talk to brokers. We already knew what we were doing. We just didn't know the Florida market. So it was a very long, slow process that we went through, because I feel pretty strongly that if I'm going to ask you to invest your money with me, I need to know what I'm doing. I need to understand the market really thoroughly and know exactly how we're going to make money in that market. So it took us a while, but it's that on the ground stuff. And probably the hardest thing in that growth market is building the credibility that you're a legitimate buyer, and it takes time.
Yep, man, I love that. I made that mistake. Well, everything's a mistake until you get through it, and then it's fine. But I bought in Texas without, establishing a presence there. And looking back, I'm realizing that is so important. Going down there, talking to people, understanding the markets well. So it sounds like that's what you did. You met with brokers. You showed them that you're actually a legitimate buyer who should be taken seriously, and then you pulled the trigger. That's awesome. And so it sounds like economics is a big thing. Obviously, you want to buy in a growth market. You don't want to buy in a shrinking market. But then I like that you said you wanted to buy in a place that you actually wanted to visit. That's key to me, because I've been thinking about that. I really like South Carolina. I love Charleston. And so I've been thinking about making that kind of a focus, just because I like the area. I would like to go there. And so it sounds like you had the same mindset there.
Mm-hmm. Yeah, there's nothing wrong with trying to set your life up so that you can be where you want to be.
Yep.
That is why we work, right?
Yep.
We work to serve our life, right?
And you're in Cleveland, I'm in Seattle. We don't get any sun here, so we got to pick something that has a little bit more sun.
We don't get much sun here either.
Awesome. So Florida multifamily, it's great that you guys saw so much success. That's not all you do, though. You do, I listed it off in the beginning. You do many different things. So, and one of them being, you kind of focus on private equity and raising capital. So kind of take us to that. That's something that I'm kind of going through myself. I told you this, before we hop on the show. I'm starting to look into raising outside capital. So what are the first few steps that someone should consider when they, want to take down a $3 million, $5 million deal that is not, they don't have the capital for?
Sure. So you got to do, in my opinion, a number of things all at the same time. The first is you want to actually make sure you know what you're doing, because you're going to look an investor in the eye and you want to be genuine, right? You want to know what you're doing. You want to understand the business that you're asking them to invest in so that you can be successful. That's probably the first thing. In addition to that, you need to line up a team that is going to help you. For example, a securities attorney. I mean, they're extremely important. There are rules about how you do this, what sort of exemptions are available, what rules you have to follow, because the SEC sets all these rules. And the last thing I want is the SEC, knocking on my door because I didn't do something right. So you need to get your hands around what kind of an offering you want to do and what are the rules and so on and so forth. So you can do a lot of that research on the internet, but you do definitely need a securities attorney. And after that, it's the whole networking thing, right? It depends on what type of offering you're going to do, whether it's going to be a 506B or a 506C, meaning it's only accredited investors or you'll let other people in. It's going to dictate how you market or not market your offering. Is it going to just be friends and family? That's kind of how I started out, friends and family. And then we kind of grew out from there after we had established a track record. Then, your natural circle of influence starts to grow because people see that you're successful. Then they come to you, hey, I'd like to do that too. And then you let a few more people in, then they tell a few more people. And then at some point, like we are now, we switched from the syndication model to the blind pool fund model. And that's a completely different model where so in syndication means you go find the deal, you lock it down, negotiate it, and then you go raise the money to get the deal done. In the blind pool fund model, it's the opposite. So you go out and raise the money first, and investors invest in the concept that you're going to buy this type of asset in this type of area, and this is the kind of returns you're going to go for. And then they make commitments to the fund, and then you go and do what you told them you were going to do, and then call that capital as you find the deals to fill the fund. So we just finished a $13 million raise. We're about to start on a $50 million raise on our next fund after we finish deploying this one. But that's the sort of the natural progression of, sort of beginner to probably the blind pool fund is probably the more advanced type of raise that you do. But by this time, we're way beyond our normal circle of friends that we raise money from. We're talking, well over 100 investors and in all of our funds and things like that. So that's sort of the story from beginning to end. But it all starts out with just understanding the landscape and what you're trying to do, and then make sure that you actually know how to do what it is you're going to go do. Like if it's apartments or self-storage or whatever it is, make sure you got it. Make sure you've had some success under your belt, because the investors are probably going to want to see some of that.
Yep. So if I got the progression right, so you're saying, you start out, everybody's going to start out with kind of their own money, or maybe, a relative's money, something like that. Yep. They found that small deal, they do it, they prove their success. The next step after that is raising just strictly from friends, family, people in your circle. And then you go on to syndications, that's a 506B, correct?
Well, syndications can be B or C.
Okay.
What matters is what types of investors you have. So a 506C allows you to market. So I can market to anybody I want to, but I can only let accredited investors in. 506B says, time out. You are not allowed to market to the open public. You can only show your deal to people that you've already established a relationship with. And there's some other rules, right? I don't want to get into the nitty gritty of the rules, but it doesn't matter whether it's a syndication or a fund. You still are potentially fit into one of those two exemptions. And remember, the scenario that you're laying out is just one way to do it. There are lots of different ways to get into this. A lot of people will start off as passive investors with guys like us, kind of see what we're doing, kind of understand it, do some training on the side. And then when they feel like they're good enough, then they'll go out and start doing it on their own. So there's a lot of different ways to do it, but most people do it the way you just described.
Makes sense. And then so after syndication, the blind pool fund model, that makes a lot more sense. And I feel like from an operating standpoint, it would be a lot easier. Question that came into my mind is, so you said you did a $13 million raise. Does that $13 million, is that dedicated just to one deal, or is it just a blanket 13 that you can apply to however many deals that you're able to acquire with it?
Yeah. The idea here, the fund size is geared to get 2 or 3 deals in the fund. And so one thing I do want to say is a lot of people never go to the blind pool fund business model. They stick with syndications. They're very good at it. They like it. They've built up their pool of investors. And so many people never leave the syndication model. I just want to make sure that's clear. The blind pool fund model, we did it out of necessity. We're operating in a very, very competitive market, which is Central and Northern Florida. So we went to that model because we need to differentiate ourselves as buyers. Everybody in the market, syndicators, they have to go raise the money. Well, Mr. Seller, Mr. Broker, I've already raised the money. That whole deal is off the table. So you come in as a stronger buyer. So we use that model as a way to differentiate ourselves. And it's proven very effective to help us get deals, right? You're not going to steal anything in Florida, especially now, but it at least gives you a leg up on any other buyer that's bidding on that same property.
Yep. No, that makes complete sense. So, I mean, going to a seller and you're saying, hey, I still have to raise the money for this, or I already have the money. We're ready to go. Obviously, they're going to choose the person who's ready to go. So makes a lot of sense.
Most of the time. Yep.
Cool. Well, thank you for taking us through that. What's next for you guys? What's the next big, big step for you?
Yeah, the next step is to just continue to, expand our investor base, continue to expand our operations slowly. I'm a pretty conservative person, so I want to have very deliberate, controlled growth because, companies that fail, many of them fail because they just focused on growth, and they didn't build out the foundation below that to support it. So we vertically integrate, meaning we manage our own stuff. That's important to me, cool. That we have that framework and that whole foundation in place. So the next logical step for us is just a larger fund, a $50 million fund that will go after larger deals. And that's kind of typical of the life cycle of somebody that does what we do.
Nice. I love it. I'm actually at that step where, I'm not quite big enough where I can hire, bring everything in-house, but man, I would love to, because then it would just be, you'd have a little bit more oversight into everything. Right now I have property managers, third-party property managers managing things, but it'd be great to have that all in-house. But, we all go in steps. So you're, I don't know how many miles ahead of me. So, which is great to see.
You'll get there. Get there. And just realize, property management's a double-edged sword. Right. I mean, we do it because I'm a very detail-oriented person. We've been doing this for 23, 24 years, and we've made a lot of the mistakes that we don't want to wait for a third-party manager to learn again. Right. We've already done it. Yep. And I believe a good part of the success of our funds and our investments is on the execution of our business plan. So it puts me in really tight control of all of that stuff. And that's important to me. But again, there's nothing wrong with using third-party managers. Just manage them. That's all. And, make sure they're performing and you'll be fine with them.
Yep. Absolutely. All right. I just took a peek at the clock. It looks like we have blown through the time that we get to chat because we need to jump into the quick question round. Are you ready?
I am.
All right. It starts with books or pretty much any form of education. I used to say books only, but now people, they consume media in many different ways. So if you could choose two forms of media, two things, book, movie, YouTube channel, whatever, that you could recommend, one for general life wisdom and then one for real estate specific.
Yeah, real estate specific. There are so many seminars, masterminds, different people like that. Get around those people that have experience in this business, because you're going to solve two problems. One is the information you're going to learn, but the other thing you're going to do is develop networks. So you're going to learn from other people. And I think that's important. In terms of just general life, I mean, I'm in my mid 50s now. So, even back when I was in my 20s, I was all about the Stephen Covey and all of the self-help, the development. I try to learn as much as I can. When I was in school, I thought, man, I can't wait to get out of school. I hate it. Right. Well, as soon as I got out of school, I'm like, wait a minute, now I really want to learn.
I got to go back.
And that's when I really got started. So in terms of forms, I tend to like just online blogs and I learned so much online from some very good sources that I would encourage people to start there.
Perfect. Do you got one in mind that you would recommend, or is just Google?
I mean, you can look at anything Tony Robbins has written, Grant Cardone's written. I mean, there's so many of those guys What I try to do is learn from people who are where I want to go. That's what I've always tried to do. I've always tried to go up a level and figure out what are they doing that I'm not. What can I learn from them? I love reading everything that Warren Buffett writes. It's not just about real estate; it's about general life. Because the reality of it is, this is just a business. Most of the thing that slows people down is their own mind, right? You got to get your mind right. You got to teach your mind how to become somebody different than you are today, and that's hard. That's really hard. So that's why it's not just about real estate, at least in my opinion.
Yep. No, I couldn't agree more. Real estate is just it's kind of the expression of everything that you are, that you do. So I love it. Moving on. United States, it is a very large place. I don't know how many square miles. I say that every time. I got to figure out how many square miles there actually are in the US so I could quote some facts here. But anyways, it's a big place. There's a lot of places to invest. So what is one place besides your backyard that you are most excited to invest next?
Yeah, any of the growth markets. It's anywhere in the Southeast, Texas. If it's a growth market, we're thrilled to be there. And our next fund, that's the biggest change in our next fund. And it's going to be, we're going to increase our geographic footprint because we have to. There's just not enough deal flow in Florida.
Yep, makes sense. Texas is a big place. The last 3 deals I bought was in Texas, man.
It is.
I love it. I love it over there. All right, moving on. And this one is for your younger self. So if you could go back to the Ken who had no experience in real estate, he was, sitting on the sidelines, watching everybody out there doing their deals. Go back to him, look him in the eye, give him one piece of advice moving forward.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah, and I would form a plan and stick to it and don't deviate.
Yep.
If there's one thing that I've probably done over my professional life, I get distracted here and there. I call them little shiny objects that you kind of just find yourself being drawn to, and you're like, wait a minute, what am I doing here? Let's get back on target. Let's get back on plan. So that would be the number one thing, because I think we'd be much further ahead.
Yeah, no, man, you're beautiful words there, because I have the same problem. It is so hard. Even if you're only in real estate, like if it's difficult to focus on what you're good at, I'm focused on self-storage. It's difficult to keep my eyes there and not look at multifamily, not look at mobile home parks, all these different asset classes. So that's great. So keep your eye on the prize. Do not deviate.
Yep.
All right, next one. And this is an opportunity for you to brag a little bit, because everybody on this earth is here, and we have strengths. We all have strengths. There is no question. And you are no different. So if you could point to one thing that you feel you are exceptional at, what would that be?
Yeah, it's probably the analytical side. Remember, I said I'm a CPA by background, a commercial lender by background. It is proven to be one of my strengths to just really dive into details and understand. Having said that's probably also been something that's probably held me back, right? Because it's probably forced me to be too conservative. But you know what? If I were to pick and choose, would I give up the strengths that I have? No. I'm thrilled to have those strengths, and I feel it's always kept me out of trouble for the most part.
Yep. Yeah, and they say your strengths and your weaknesses, they're just obverse variations of the same thing. So you can't really have a strength without a weakness. You got to choose. Since you have that strength, you just focus on it and keep moving forward.
You bet.
Which brings us to the very last question. You have given us so much wisdom for real estate investors out there. I'm sure people want to reach out and say hi. What is the best way for them to do that?
Yeah, so the best way is to go to our site, kripartners.com/ebook. So it's a book. You can get it for free. You just got to give me your email address and get on our list. The title of the book is Multifamily Real Estate's a Total Game Changer. And I wrote the book myself. I focused on two things for the book. The first is the number one question I see everybody facing when they get into real estate. They know there's a ton of money to be made. They're trying to figure out, how does it fit for them? And we talked a little bit about that on this call. Should it be a single, a double, self-storage? And I go through that whole process to help you think it through, right? I mean, I can't tell you how many times I've had a physician say, you must stop being a physician and become a real estate investor. I'm like, time out, maybe you need to rethink this. The second part of the book, I make the assumption that most people should passively invest in real estate because they just should, right? They don't really want to change careers. They love what they do. So if you're going to passively invest in real estate, you have to understand how this sponsor side of the business works. So for example, if you're looking at investing in our firm, you have to figure out how do I know KRI is the right place for me? How does this business work? That's what the second part of the book talks about. Give me some insight into how the industry works, what makes KRI what KRI does, and gives you some ways, some benefits, or some ways to vet these sponsors, because that's the number one thing that is difficult for a private investor to do, is to figure out, is this the right firm for me or not? Are they good? Is it for real? So on and so forth. So I take the reader through that. So again, it's kripartners.com/ebook. It's easy to remember, but I think it's an important read because everybody that's trying to figure this out is probably going to go through those two processes, and it's hopeful that I can help them through it.
Perfect. All right. So that's kripartners.com/ebook. I will put that URL in the show notes. So if you guys are interested in grabbing that, sounds like a really good place to start. If you're a new investor, or if you're looking to invest passively, just click the little description click the little more button in the description. It'll pop down the full description, and in there you can find the URL and click through and get that ebook. So Ken, it has been a pleasure. I really appreciate you coming on here. Thank you very much.
Thank you for having me.
Absolutely. And for everyone else who is on here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any question whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started, or an established investor looking to take your business to the next level, I've created an ebook just for you, available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate.
And finally, you will get the wholesaler's template for quick assignment cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.